Hey Puppy Trades, I wanted to do a video analysis update on the general stock market. Try to make this video a little shorter, a little sweeter, a little more fun. We're also going to talk a little bit about Elliott wave principles. We're also going to talk about the long-term picture of the stock market. So we're going to have a lot of fun in this video. I'm going to try to make this one a little shorter and a little sweeter than my prior videos. Okay, so let's get right into it. The last time we talked, we were talking about the importance of not staring at SPY all day, okay? There's only one group of traders who makes money staring at SPY all day, okay? And they are called subscription service gurus, okay? They make money staring at SPY all day because staring at SPY all day and telling regular people it's about to crash is how they get subscribers, okay? If you actually want to know where the S&P 500 is going, you look at Google, you look at Apple, you look at Microsoft, you look at Tesla, you look at individual sectors within the S&P 500, and we're going to do that today. But in my last video, we talked about Google and we talked about Microsoft, and we said, hey, I don't think the market's about to crash because Google has broken out and back tested a beautiful bull flag. And this is the exact same high that the rest of the stock market made. Okay, so before I go any further, we're going to rewind a little bit, way back to 2 months ago, where Google and Tesla broke above this high in September. Okay, and everyone was like, oh my gosh, is the market going to crash? Is the market going to crash? And they were saying that for literally months after Google and Tesla had already broken above this high. Okay, so trade and analyze the stock market as a whole. Okay, and I'm not trying to get too out of the water with these correlations, but the reason that correlation analysis works is because stocks are traded within exchange traded funds. That means most of the time when people invest in Google and people invest in Apple and people invest in Microsoft, they're not doing it by buying individual shares. They're doing it by buying the QQQ ETF, the XLK ETF, the S&P 500 ETF. Okay, so when components of the NASDAQ break above the exact same high that the NASDAQ already made, you don't need to be freaking out. Okay, because if Google is incomplete to the upside and it just exploded above the exact same high that QQQ made last week, and Microsoft broke above that high today, it broke above that exact same high today, there is no reason to be freaking out about where is the stock market going to go, or at the very least, is that the high? Because if it's not the high on Microsoft and it's not the high on Google, then it's not the high for the S&P 500. It's not the high for the NASDAQ, and it's not the high for Apple. Okay? So Google is already above this high. It's already above this high. It broke above this high 36 hours ago. The stock market has already told you last week wasn't the high. Okay, if Google is in an incomplete bullish sequence to the upside and it just exploded above last week's high, then the S&P 500 and the NASDAQ are going to break above last week's high. Okay, we'll talk about what that wave count is going to look like. But just know we had this perfect bull flag, breakout, and back test. And I said last week, there's no way that the high is in for the market because the high clearly isn't in for Google. And then what happened? Yesterday morning, Google broke above this high, and then today it exploded above last week's high. So what do you think the NASDAQ's going to do? What do you think the S&P 500 is going to do? Google and Microsoft are components of the NASDAQ, okay? They're in the exact same ETF. Microsoft broke above last week's high today, right? So if you're staring at SPY all day, you are missing so much information. The only people who should stare at SPY all day, and the only people who do stare at SPY all day, are people who sell subscription services, okay? And why do they stare at SPY all day? Because saying the market's going to crash gets them subscribers. It's sexy. It's fun, right? They get to draw, fun lines that look like this. Oh, this is going to happen, right? We're going to go retest the low. This is just wave theory, A, B, C, nope, right? We know that's BS, but most people don't. So if you were trying to get as many subscribers as possible, you're just going to BS them because you don't care if they lose money. Why would you? They're giving you subscription service money even though your trades are horrible. Why would you stop? I wouldn't stop. I wouldn't ever stop, okay? Microsoft already broke above last week's high. Google already broke above last week's high. That means that for the past 36 hours, if you've been questioning whether or not the S&P 500 or the NASDAQ were going to break above last week's high too, you were just not paying attention. You weren't paying attention. Okay, so let's look at Apple right now. I think Apple's a really good setup right here. We look at Apple, it had an A, B, C correction from the September high, then it went on a wave 1, then a wave 2, and it broke above this wave 1 high. So we know this is a completed 1-2 correction. So in Elliott wave theory, you take the beginning of wave 1, you connect it with the high of wave 1 and the low of wave 2. We have beautiful reactions on the median of this pitchfork, and I believe right now there's a very clean setup in Apple in the short term where we can see that this is a bull flag, and we have a breakout and back test of this bull flag with declining volume bars confirming bullish consolidation. I believe what's going to happen is that Apple has a really good trade setup right here to 152. That 152 number is very important because it is not only the equal legs target of this move placed at the September low. So that's why we've been continuing to be bullish for so long, was because we know at the very minimum, Apple has to reach the length of this move placed at this low. Okay, so this equal legs target is 152, and we have a perfect bull flag right now where Apple has broken out and back tested this bull flag, and that equal legs target is also 152. So I think right now, if you wanted to have a really, me, not investment advice, if you wanted to have a really tight stop loss at 130, there's a really good risk reward setup. I don't think Apple will break below 130. I think a more, reasonable, looser stop loss would be this bull flag low of 127. So if Apple's above 127, Apple's above 130, we are expecting that Apple is going to go on a run in the next 4 weeks at the very maximum to 152. Where does that 4-week time target come from? It comes from the fact that this is a 4-week move. Okay, so this is a 4-week move placed at this low. We've broken out and back tested this bull flag already. If 130 to 127 holds as the low, really nice risk reward setup on Apple, where we are expecting it to go to 152. We are actually expecting it to go slightly further because we are really thinking that Apple's going to reach the median of this pitchfork. But I think at the very minimum, there's some pretty good money to be made for Apple going from 134 to 152. And the cool thing about this is I think that Apple's going to do this in the next 4 weeks. Okay, and we have a lot of confirmation already. Microsoft is already above last week's high. Google is already above last week's high. So there's a lot of confirmation that Apple is going to break above last week's high. And that's a lot of money just to be made, just getting back to that high, right? So people say, technical analysis and, wave theory is voodoo. It's really just simple logic. Apple, Microsoft, and Google are in the exact same NASDAQ ETF. Google and Microsoft has already broken above this high. Apple's going to break above this high. It's going to go the length of this bull flag in time and price at the very minimum, placed at this low. This was a 4-week run. This is going to be a 4-week run. I think Apple's going to reach 152, honestly, by the end of February. I would say the first week of March to be conservative. Mid-March to be very conservative. And then where do we also get 152 from? Well, we've been waiting for 152 for Apple for a really long time. That's one reason why even when SPY reached 100 or 382, I didn't come out and call the top or anything, because I'm not a moron, but also because Apple hadn't reached this equal legs target of 152 either. And obviously tons of other reasons. XLE, we'll get into another one right now, XLV. But anyway, we have these levels above 127, above 130 to be really tight. I expect Apple is going to reach 152 in the next 4 weeks. This is a really nice wave count right here on this ETF. This is XLV. So this is the healthcare sector. So I would say if you want to know where SPY is going, look at the top holdings of SPY and look at the individual ETFs within SPY. You will know the answer. You will know the answer very easily. We went over XLV. We went over IYR in the last video. This is a wave count that I think is even more proving that the market has more upside, besides the obvious fact that Microsoft and Google have already broken above last week's high. It confirmed for Microsoft and Google last week was a bear trap, so it's going to be a bear trap for SPY. It's going to be a bear trap for QQQ. Okay? So we see right now XLV had a very clear wave 1 from the election low, and then a really clean A, B, C correction. So that is honestly really pretty right here. And then we've broken above this high. So we confirmed that this is a wave 1. We confirmed that this is a wave 2. And we broke above the wave 1 high. We confirmed that all of this is consolidation. So the very minimum wave 3 target is the length of wave 1 placed at this wave 2 low. the actual wave 3 target is the 1.618 Fibonacci extension. So we believe that XLV is honestly incomplete to the upside until 121 is reached at the very minimum. The ideal, textbook wave 3 target would be 123 because wave 3 is 1.618 times the length of wave 1. And then we have a gorgeous pitchfork right here where we take this major low, connected with this high and this low. Beautiful reactions on the median. And when I talk about beautiful reactions, look at this candlestick right here. We can see an absolutely gorgeous daily wick just pierce into that median. And then we have all these reactions. So what I really love to see is after we've connected our major points for the pitchfork, that the median acts as a magnet. And then also, interestingly, that the median will act as resistance. So we have all these incredible reactions on the median of the pitchfork. And then now, just magically, we go to the lower bound of this pitchfork. So this is a completely valid pitchfork. We saw that a lot of XLV components like Novavax, INO, Kodak's, Abbott Laboratories had really nice weeks last week while the stock market was down. That's signs of healthy sector rotation, in my opinion. I'm looking at healthcare as a huge indicator for where SPY will go. So this is the XLV. Let's just say right now, we want XLV to hold above 111. An actual invalidation level would be, 109, 107. We don't really want to get down there. I don't think we're going to get down there. But I am expecting that XLV will go from the lower bound of this pitchfork back to the median of this pitchfork. And from a wave theory standpoint, this is the wave 1, ABC, wave 2. The absolute minimum target for wave 3 is 121. The textbook wave 3 target is 123. That's most likely going to be at the median of this pitchfork again. And then as you'll remember, that's only wave 3. We have a wave 4 higher. And then we take the length of wave 1 as our minimum target for wave 5. So XLV right now is telling us it's got a lot more upside. From a pure Elliott wave standpoint, this is wave 1, this is wave 2. We broke above this high. That's all confirmed that this is the wave 1 and wave 2. The minimum length of wave 1 placed at the wave 2 low is our wave 3 minimum target, which is 121. The 1.618 extension is the textbook wave 3 target, and then we'd have a shallow, mostly sideways wave 4 consolidation before wave 1 higher. So that's something to keep in the back of your mind. Not only has Google and Microsoft already broken above last week's high, but if we look at this XLV wave count, there's a lot more upside. 121, 123. To be completely honest, that's way more important to me than where SPY is going. But, I am technically a guru, so I'm going to have to, say where I think SPY is going right now. It's the same story as always. It's the exact same Andrews pitchfork. A lot of you guys doubted the pitchfork last week. The pitchfork, as usual, proved the doubters wrong. This is a really beautiful pitchfork on SPY right here. So I actually like it better on the weekly chart. The weekly pitchfork is so gorgeous. We take this low, we connect it with this high and this low. Boom. Look at that right there on a weekly candle, just piercing into the median of the pitchfork. Then we have our reactions on the lower bound. We have our reactions on the lower bound. And then just look at this. We're going right back into the lower bound. We're going right back into the median. So if you really want to know when the stock market's going to top, I think the most beautiful, SPY pitchfork is on the weekly chart. You take this low, connect it with this high and this low. Gorgeous reaction on the median. Then we have these reactions on the lower bound. And it looks like we're going right back to the median again. And let's look at that on the daily chart real quick. So we look at this on the daily chart. It's even prettier because we have more candles. But if I take this pitchfork, connect this low with this high and this low, I'm going to need to reconnect that. Yeah. We have really nice reactions on the median of the pitchfork, really nice reactions on the lower bound, and then we've gone right back into the lower bound. It looks like we're going to make a run to the median soon. Once this median is reached, that's kind of when all hell is going to break loose in the stock market, in my opinion. So we'll be looking for that from a purely SPY related standpoint. We could also take this low, connect with this high and this low. It's a slightly more, angled upward pitchfork. We still have that really nice reaction on the median of the pitchfork, really nice reaction on the lower bound, but I think this low is the best low. And then we connect it with this high and this low. two really nice reactions on the median, where the median was proven to act as a magnet, proven to act as resistance. Now we have reactions on the lower bound. It looks like we're going back to the median. We're going to see that's going to take SPY above 400. And then, of course, we talked about the fact that at the very minimum, we're going to 392. So I take the length of this move in time and price. I, clone it. We had this as the bull flag for a while, and then we broke above this high, kind of give confirmation that, this wave count was correct, that this was a 1, 2, 3, just like XLV was a more clear 1, ABC, 2, 3. But that's how we get, for SPY, our very conservative target of 392. We had this as a little bull flag right here. And then from a Fibonacci standpoint, I talked in our last video about how the negative 123.6% retracement is a really reliable retracement to hold out for after a major correction. We talked about how, that would have been a very good selling point for, this correction, for this correction, and for this correction. And now if we look right now, if we take our fibs, go with this high and this low, this high is 354.02. And then this low is 322.60. And then that's going to take, we're going to do the negative 123.6% retracement. That's going to take SPY to 392, which conveniently is exactly this equal legs target for the bull flag. So 392, clearly an important number. I don't think this is going to be the top. This is more of our, really, really hit the brakes once 392 is reached. But the cool thing is we actually had a really nice correction already. So in wave theory, once a correction is proven to be a correction, that means that it built energy for another leg higher. And so I do think this was building our energy to go to the median of this pitchfork. I think more important, and a lot of you guys are going to have trouble with this, XLV, more important to me. XLV reaching 121 to 123. I think that's personally where I'm going to say is the next big level. And then it's not just XLV. We have an even cleaner wave count on XLE, the energy sector right here, where we take the length of this move in time and price, place it at this wave too low, and that cleanly has XLV at the very minimum reaching 51, and the median of this pitchfork. We see if we take the beginning of wave 1 connected with the high of wave 1 and the low of wave 2, the median of this pitchfork right now, that's a gorgeous reaction where the daily candle, the wick just perfectly pierces into the median, and now it looks like we're going back to the median. So, a lot of you guys are going to have trouble with this. You want to just know, what's the SPY number? I can tell you right now, the XLE number is 51. The XLV number is 121 to 123. Okay? And why is it so important to watch the whole stock market instead of just staring at SPY? Well, because look, Microsoft has already broken above last week's high. Google has already broken above last week's high. Okay, so if that's already happened, then we know that Apple is going to break above this high. We know SPY is going to break above this high. We know QQQ is going to break above this high. So I really like this Apple setup. Bull flag, breakout and back test. If 130 to 127 holds at the low, I think Apple's going to be at 152 conservatively in the next 4 weeks. That also comes from taking the length of this move in time and price, placing it at the September low. We've been waiting for Apple to reach 152, holding out for that for a really long time. Okay, now we're going to talk about a couple of long-term, I wouldn't necessarily call these setups. I mean, they're ideas that I really like. We're going to talk about some long-term analysis right now. I'll talk about, I think more, importantly, just Elliott wave theory. So we're going to look at American Airlines, Boeing, and JetBlue on the long-term time frames. And I'm also going to put SPY into this as well. So we have, SPY very clearly, take this low connected with this high and this low, two gorgeous reactions on the median, reactions on the lower bound. We're going back to the median. We are very safely going to 392. Okay? I'm going to clear this. We're going to look at SPY on the long-term time frame. And this is kind of going to be a very long-term projection. Okay? So focus less on the time targets here. Obviously, I'm not giving investment advice. This is almost more geared toward someone looking 5, 10 years down the road as opposed to someone who's trading options that expire in 3 months. Okay? So right now in the Elliott wave community, a lot of people are wondering, is this going to be a major, super cycle top, where after this high is reached, we're going to do something, crazy, like, go retest like this low or something like that. I'm sure we've all seen by now 1,000 times the megaphone pattern. I don't think this is going to happen. I'm going to talk about why I don't think this is going to happen. But the whole point of my thesis of wave theory is you have to trade the entire market as a whole. Okay, so instead of asking where the S&P 500 is going, in this video, we're going to ask where Boeing is going, where American Airlines is going, and where JetBlue is going. So let's look at JetBlue right now. This is the airline. This is the long-term 20-year chart. Okay, in my opinion, this is an extremely clear wave count. We go into wave 1, we go A, B, C, wave 2. We put in a generational low right here in March. Right, this is the COVID sell-off low. I believe that's a generational low. We have really nice reactions on the median of this pitchfork. Look at this candle right here. The wick of this candle perfectly gets into the median. So whenever you have a 1-2 in Elliott wave theory, you take the beginning of wave 1, connect it with the high of wave 1 and the low of wave 2, take the length of wave 1, place it at the wave 2 low. That's your conservative wave 3 target. Now, I'm going to stress the word conservative because if I was holding JetBlue the long term, I wouldn't be thinking about selling at 31. Because once 31 is broken, that's going to confirm a wave 3 in progress. And then as we know in Elliott wave theory, you have your wave 3, which is actually bigger than the length of wave 1, a shallow wave 4 correction, and then another wave 5 higher. Okay, so when you think about these crash scenarios, these super crash scenarios, I really want to challenge you to look at American Airlines, look at Boeing, look at JetBlue, and where do you see the crash scenario on this chart, right? That doesn't really fit. This chart's kind of running out of room to the downside, and that's not really even the core of my argument. The core of my argument is this is the textbook wave 1, and ABC correction puts in a generational wave 2 low, and the length of wave 1 in time and price places this wave 2 low. It's going to take JetBlue to 31 at the very minimum. 31 at the very minimum in the next few years. So, if we think that JetBlue is going to double, and actually more than double, because remember, that's a very conservative wave 3 target, then we'd have a wave 4 sideways, and then a wave 5 higher, which is at minimum the length of wave 1. Just doing some math in my head, that's going to take JetBlue into the 50s, into the 60s, right? So if you think, JetBlue is going to quadruple, quintuple from its current level, then it doesn't really make sense to look at the SPY chart and say, okay, well, while JetBlue and, we'll go over American Airlines and Boeing are, quadrupling, SPY is going to be crashing, right? That doesn't really make sense. So, just really simple, JetBlue, wave 1, ABC correction, wave 2. On the long-term chart, you take the beginning of wave 1, connect it with the high of wave 1 and the low of wave 2. Gorgeous pitchfork. It's going back to the median of the pitchfork. Wave 3 at minimum is going to be the length of wave 1. That's going to take JetBlue to 30, 31. Remember, that's just wave 3, and that's the conservative wave 3 target. Let's look at American Airlines long-term chart. It's the exact same thing. We have our wave 1, and then we have the ABC correction. Clone this tool for the wave 3 target. Wave 1, an ABC correction. And then we have our wave 2 low that is put in March. The whole point is that JetBlue, Boeing, Delta Airlines, American Airlines, they're all the exact same wave count on the long-term charts. You can replicate these on basically every airline. For the sake of time, we're just going to do American Airlines, JetBlue, and Boeing. But the whole point is that this is the wave 1 and ABC correction. We put in another generational wave 2 low for American Airlines. So we're going to take the length of wave 1 and time and price, place it the wave 2 low, and that takes American Airlines to 65, right? So just think about that. If we think American Airlines is going to go to 65 and it is going to go to the median of this pitchfork, that means that we are expecting the largest commercial airline in the world to quadruple, essentially. And that's, remember, a very conservative expectation, because this is the very minimum wave 3 target, because it's just the length of wave 1. So we're expecting American Airlines on the long-term cycles is going to quadruple, and we're expecting that JetBlue on the long-term cycles is going to quadruple. So when we look at the SPY count, do we really think that the S&P 500 will be crashing at a time when all these airlines are exploding? The answer is no. Okay, and that's the whole point. Boeing right now, one reason I'm really honking on Boeing right now is because this is not only a good setup in the intermediate term, it's an extremely good setup in the long term, right? This is a not financial advice. This is a grandchild investment, in my opinion. This is a cornerstone right here. You love your grandkids, you get into this one. Obviously that's just my personal opinion. Don't ever follow me. But if you take the length of wave one in time and price, very conservatively, Boeing's going to 481, right? And remember, that's the minimum. That's the conservative target, is that Boeing's going to 481. Because remember, wave three at minimum is the length of wave one in time and price, placed at the wave two low. So we're expecting at the very minimum, Boeing's going to double, American Airlines is going to quadruple, and JetBlue is going to quadruple on the long-term charts, right? And that's, so if we are expecting, these airlines, these industrial components to be doubling and tripling and quadrupling, then there's no way that you can look at this SPY count and say, well, during all that, while American Airlines is quadrupling, while JetBlue is quadrupling, while Boeing is doubling, SPY is going to be crashing. That's not going to happen, right? And if you don't trade the entire market as a whole, that's not going to make any sense. And by the way, there's much more stocks that we can do this with. And I'm just focusing on American Airlines, JetBlue, and Boeing for now, because now let's try to count SPY. Now that we know that it doesn't make any sense to say that SPY will be crashing at a time where all of these airline counts are saying the exact same thing. This was a generational wave two low that we put in last year. American Airlines, conservative target is 65. Conservative target is 65. JetBlue, conservative target is 31. Boeing, conservative target, and this is extremely conservative, is 481 on the long-term cycles. So if we are expecting, all this to happen, how are we going to look at SPY and say, well, in the long-term time frame, SPY is going to be crashing here, right? That's what everyone expects, that this is, going to be the end of the road, and then we're going to have, the Great Recession, okay? That's not going to happen, okay? So let's talk about what will this count really look like. Well, there's not really much debate. That's a 1, and that's a 2. There is no debate in that in the Elliott Wave community. So we have closed above this high way back from early 2000. And then we had our ABC corrections. Not really any debate here that the S&P 500 completed a wave 1, has closed above the wave 1 high, and is going, it's in the middle of an impulsive wave right now. The idea is that once this impulse wave ends, there's going to be some super recession, okay? And we've just talked about with Boeing, American Airlines, and JetBlue, that's not going to happen. There's not going to be a super recession, because if Boeing is going to double, American Airlines is going to quadruple, and JetBlue is going to quadruple, your SPY is not going to be crashing during that time, okay? So this is a wave 1 and ABC wave 2. We've broken above this high, okay? So this is a confirmed, ABC, wave 1, wave 2. Now, this is where it gets tricky. What's this, right? There's a couple answers. I'm just going to say, we're going to talk about the first answer right now. So what's this wave, right? This high, this peak right before, the COVID sell-off. What is this, right? Well, some are going to say this is a 3, and some are going to say this is a 4. And so when we end wave 5 right here, we look for the mega recession, right? And honestly, if we're just looking at SPY, I can't really refute this. To be completely honest, I can't really refute this count. There's nothing wrong with this count. This is a wave 1 and an ABC correction wave 2. That's a wave 3. That's a wave 4. And then we're going to finish wave 5. And, then all hell's going to break loose, right? Well, if you're just looking at SPY, I can't say that's incorrect. But if we're looking at Boeing, I can definitely say that's incorrect. Because Boeing's going to break above this high. It's going to explode. We're going to be talking about Boeing as a $1,000 stock, in the next, couple of years. Maybe not the next couple of years, next 5 years, next 6 years. Yeah, we're going to be talking about Boeing as a $1,000 stock. It's going to break above this, high conservatively. And wave 3 at the very minimum is the length of wave 1, and then it consolidates sideways into a shallow wave 4, and then takes a wave 5 higher. So yeah, we're going to be talking about Boeing as a $1,000 stock. it will break above this high, right? So Boeing, we're talking about Boeing doubling, tripling, quadrupling. And while all that's happening, SPY is going to be crashing? No, that doesn't make any sense. So American Airlines is going to go on this insane run from this COVID low. It's going to go on a wave 1, an ABC correction, wave 2, and then it's going to go on this giga bull run to 65. And while all that's happening, the S&P 500 is going to be completing a wave 5 and crashing. No, that doesn't make any sense, right? JetBlue is going to go the length of wave 1 and time and price. Conservatively, it's going to double conservatively, and that's the very minimum, wave 3 target. We actually think it's going to go much higher, consolidate sideways into a wave 4, and then take another wave 5 higher, which is the length of this move again. At the very minimum, place at the wave 4 low. So we're talking about JetBlue quintupling. We're talking about American Airlines quintupling. We're talking about Boeing quadrupling, quintupling. And during all that time, you're telling me the S&P 500 is going to be crashing? No, that doesn't make any sense. So what's this really? Well, what this really is, when I say this to most wave theorists, they're going to think I'm nuts, right? And that's the point. It's the most unexpected scenario. You don't want to just be contrarian, but that's the most unexpected, scenario is what I'm about to present. So what's really going to happen long term? If I'm talking to someone who is about to, they retire in 4 years, they retire in 5 years, and obviously I'm not a certified financial advisor, but if I'm talking to someone who's, worried about their 401k, what's going to happen? Well, this is clearly a wave 1, ABC correction, wave 2. No debate about that. The question is, what's this? Is this a 3? If you just look at SPY, there's nothing you can say that says this isn't a 3. Besides the fact that most wave 4s are mostly sideways, and this kind of looks like a wave 2, but we don't want to get kind of, sort of, maybe with 401ks. Okay, so if this is a wave 1, this is a wave 2 low, what's really going to happen? This isn't a wave 3. That's a wave 1. And that means this isn't a wave 4. This is a wave 2. That means, sorry, I actually typed in a wave 4. That means that this isn't a wave 4, it's a wave 2. 1, 2, 1, 2. That means what we're in now isn't a wave 5, it's a wave 1. And that means that the correction that we're expecting after we get to, this median that we keep talking about, after we get, I believe, slightly above 400, this correction we're expecting isn't the end of a wave 5. It's the end of a wave 2. So while everyone is expecting Armageddon, super crash, till death do us part, we already know American Airlines disagrees. JetBlue disagrees. Boeing disagrees. What's really going to happen on the long term is what absolutely no one expects. 1, ABC, 2. This isn't a 3. This is a 1. This is all wave 1. Try to fathom that. This huge run, this huge Barack Obama to Donald Trump run, 10-year run, that's a wave 1. The COVID sell-off, that's just a wave 2. It built up energy for a massive move higher. That means that what we're in right now is all just a wave 1 from this March low. And when we complete this wave 1, when we reach the median of this pitchfork I keep talking about, when we have the wave 2 correction, that's not going to be the end of a wave 5 super cycle. It's going to be the end of another wave 1. This is a triple nest. This is the most bullish thing that's possible. We still haven't seen a wave 3. Let me repeat that. We still haven't seen a wave 3. This is a wave 1. This is a wave 1. This is the wave 2. This is the wave 1. This is the wave 2. We're going to go 1, 2, 1, 2, 1, 2. Boeing's going to quadruple. American Airlines is going to quadruple. JetBlue is going to quadruple. And SPY is going to complete the giga nest, the triple nest. The actual term for this in LA wave theory is literally called a super nest, because not one of these runs has been a wave 3. That's a wave 1. That's a wave 1. 1, ABC, 2, 1, 2, We finish wave 1, wave 2 correction, and then we explode to numbers right now that are unfathomable and uncalculable. This is the most bullish thing that's possible, and it's going to be happening when everyone thinks this is the super cycle wave 5. So what's the minimum target? Well, for now, the minimum length of wave 1, place of the wave 2 low, is the minimum target. So we place that at the COVID low. Our minimum target for wave 3 is 490. That's the minimum target. That's the minimum target. That's the lowest it can go. Because remember, that's a wave 1. This is a wave 2. The lowest it can go is wave 3. And that's just wave 3. Then it consolidates sideways into a shallow wave 4. Wave 5 at the very minimum is the length of wave 1, place of the wave 4 low. We're talking about the S&P 500 in the upper 500s, in the 600s. It's not going to crash. It's going to have a wave 2 correction, and then it's going to explode. And that also fits in with what we've been talking about on the shorter term cycle. Because remember, we've been saying that this is all a wave 1 from the March low. So if we look at Tesla, we can take the length of wave 1 and time and price, place it at this wave 2 low, and Tesla has already reached this point. So if we go the length of wave 1 and time and price, placed at this low, we can recreate this count on Tesla. That's going to take SPY, I think, to 460 this year. So what I'm expecting to happen pretty soon is if you take this bull flag, or you take this pitchfork from this low, connected with this high and this low, we're about to reach the median of this pitchfork, where we see a beautiful reaction on the median. We're about to reach the median again, and then it's going to be a textbook bull flag, breakout, and back test. I believe the S&P 500 will reach 460 this year.